Hi guys, welcome back to my channel. Kelvin here. It is a known fact that the rich get richer. How rich? Is it rich enough to one day say,
I don't need the money, I bathe in mineral water?
No, that's not rich enough. The people who are actually super duper rich actually have access to infinite money. So much so that even makes Papa Power money printing look like a joke. But do you know why? Because magic. Or you might say, che, that's because they got more money than me ma. Well yes, but no, having more money is not the real reason. So in this video, I want to explain how the rich gets richer. No, not only that, I will explain how the rich have access to infinite money and are able to pass the wealth down to the next generation. More importantly, I will also tell you how you can do the same too. But before I start, I would really appreciate it if you can help to tap the like button because it will help out with the channel a lot. In return, I will show you a rich person's house. Alright, let's start right now. There are a lot of data that shows that the rich gets richer. For example, this is a chart of the billionaire's wealth in relation to GDP. Yes, they measure the wealth by GDP, not by our normal $10-20 in the bank account. In Russia's case, in 2020, billionaire's wealth is around 23% of the GDP. But in 2021, it has increased to almost 35%. Also, throughout the years, the income gap for the rich and the poor only keeps increasing. As of 2019, it was found that the world's richest 1% owns about 43% of the entire world's wealth. So, how are they actually doing this? To understand it, you first need to know the difference between a rich person and a wealthy person. When you see people trying to show off, like wearing a Rolex watch, driving around in Lamborghinis, branded shirt, branded bags, there's a chance that he is rich, aka he has a lot of money. But that doesn't mean anything. On the other hand, wealthy people are people who own a lot of assets. And by the way, wealthy people look really normal on the outside. Like Elon Musk, Warren Buffett, they dress simple and drive a normal car instead of trying to show off because they don't need to. So there are 3 easy steps that the rich use to stay rich. Buy, borrow, die. Well, for die, all of us can do it. But not everyone can do the buy and borrow. That's why we can't reach their level of wealth easily. Let's go through the steps. Step 1. Buy. In this step, you acquire an asset. Not just any asset. This asset needs to be able to hold its value well. Stuff like good stocks. Good stocks, I don't mean stocks like GameStop or AMC. By good stocks, I mean Disney, Google, Apple. Stocks that can do very well over 10, 20 or even 50 years. Another good asset could be properties like lands and buildings, where you can either stay in it or rent it out for income. There are more examples like cryptos, businesses, or even intellectual property. Notice I don't mention cash here because cash is not an asset. By itself, it won't give you any return. And when inflation comes, it will eat up the cash like nom nom nom. So you'll be easily losing a few percent every year just by holding cash. So that was the first step, buy. Quick pause, let me share a lobang to where I get my stock news. Morning Wrap. So basically, Morning Wrap is a newsletter that's sent to your inbox 3 times a week and you can quickly catch up with the latest news while drinking your Milo Peng. The special thing about Morning Wrap is that it summarizes all the big news into super easy to understand point form. Like today, Alibaba, Bilibili and Baidu was going down, down, down. The crash is not over yet, But it's not always stock news everywhere. That would be boring. Sometimes they will also show you some random stuff like the lunar eclipse happening. All in all, I feel that it's a very good tool to keep you updated with the stock market and you can see how business news impacts us and our investment. Best of all, it's completely free. Once you sign up, you'll get your weekly update every Monday, Wednesday and Friday. So if you are interested, you can just head over to Morning Wrap, enter your email and nickname to sign up. Alright, let's get back to the video. Now comes the second step. Borrow. In this step, you borrow against your assets. For example, Mark Zuckerberg is a billionaire, but he still takes a 1% mortgage to buy his house. Or super rich people like Beyonce and Jay-Z still take a mortgage to buy their $88 million house. Even though they definitely are able to buy the house immediately using cash, like all in. Then you'll be like, hey, siao you got money already, just use your money buy Why borrow money? Later you have to pay interest. Remember the first step just now? Buy. Now, the wealth is tied up in assets. If they want to get their cash back, they will have to sell their assets. But this method has a few problems. The biggest problem is taxes. In Singapore, we don't have that problem because in Singapore, there's no capital gains tax. Welcome to Singapore. But in US, whenever you sell and make a profit on your stocks, Uncle Sam be like, I want some of that 10s, up to a godlike 37% tax rate. So to overcome that problem, the rich don't sell. They be like, you won't be taxed. if you don't sell. That's why you always see news like the rich pay lesser tax than us. Second problem, you know the famous saying, buy low, sell high? When you see good companies like Disney, Google, Apple, Coca-Cola, over the long term, their price will go up. If you sell, when are you going to buy back? Wait for the dip that may or may not come. You wait long, later you sell, the stock goes up another 50%. So the rich be like, you won't time the market wrongly if you don't time the market. That's why the rich won't try to buy low and sell high like many of us apes. Instead, their goal is to buy and buy and buy. Let their wealth grow together with the assets, then borrow against the assets. For us, when we borrow money, the bank will usually check how much we are earning, right? Because they want to see whether we can afford to pay back the money or not. If we earn more, then they can lend us more. But for the rich, their loans are different. It's something called securities-backed line of credit, in which they use their assets as collateral, then borrow against it. The wealthy have a lot of assets that they can borrow against, like property. Because of that, they are considered low risk. They are able to get a loan at a super duper low interest rate at just 1 to 2%. But for normal people like us, the interest rate is way higher. Like if we were to borrow a personal loan, the interest rate is around 3 to 4%. Or if you can't pay back the credit card debt, the credit card company will come after you with the 25% interest rate. Here's one more thing. If you are able to borrow a loan at let's say 2% interest, as long as you are able to invest and get a return of anything higher than 2%, it's already free money. For example, if you borrow 100k loan at 2% interest, you take it and invest in the S&P 500, which gives 10% annualized return. You will get 10% return minus the 2% loan interest. So you will end up with $8,000 per year. Remember, the $8,000 doesn't come from our own money. It's borrowed money from the bank. So essentially, you earn $8,000 from nothing. By the way, you think they are borrowing so little? These are just rookie numbers. They are billionaires. That's 9 zeros. When they borrow, it could be a small loan of $1 million or even $100 million. That's 8% return would easily be $8 million a year for them. Also, the loan that they borrow doesn't even need to be for investment. It could be for their fancy lifestyle, like their bungalow, their Tesla car which I couldn't afford, their yacht, or even a vacation at the Sentosa beach. Because it makes more sense to borrow at a 1 to 2% interest rate than to sell and get slapped with a 37% tax rate. Finally, in the third step, they die, and their wealth is passed on to their family. In Singapore, there's no inheritance tax, so their heir gets to receive 100% of the wealth. Good guy Aras. In US, there's something called step-up tax basis, where the heir receives the assets at the current value. So there's $0 tax if the heir sells, because IRS will treat it as though he didn't profit from it. More importantly, if he holds the wealth instead of selling, he can repeat the steps all over again: buy, borrow, and die. But this time, he has more wealth to work with because the assets will have gone up in value. So that's basically how the rich have access to unlimited money, and they keep getting richer generation after generation. Assuming the heir doesn't go and sell everything. Then you'll be like, why are you telling me all this? I'm also not rich. The only asset I have is Dogecoin. So even though we are not rich, by knowing how the rich invest, we can actually learn from them and improve our investing strategy. Here's how. First, instead of trying to buy and sell, then come and ask me, so stocks are going to dip or not? Stop trying to time the market because you are not Fatco. Stats tells us that if we are not Fatco, we will underperform the market over the long term. Instead, the idea is to accumulate as much wealth as possible. Apple, good stock, buy. Google, good stock, hold. Then let the wealth grow over many years. Next, look for ways to borrow and earn against our assets. Like you can borrow margin against your stock portfolio. Then you'll be like, oi, play with fire, later you burn your hand. Margin is like fire, right? You can use fire to cook a nice meal for your loved ones. Or you can use fire to burn your enemies, which is illegal of course. Please don't do that. The point is, if you know how to use debt properly, it is a very powerful tool. For example, I'm using some of my margin to sell options, and I was able to generate some returns from it. Best of all, on some platforms like interactive brokers, the interest rate is super duper low at around 1.58%. Besides stocks, you could also borrow against your property. For HDB, you can't really do that. But if you have a condo or landed property, there's something called cash out refinancing. Basically, you can use a property as collateral, then borrow money against it. According to 99 Co, the interest rate is around 2%. This means that as long as you are able to find any investment that's higher than 2%, it's free money for you. For example, something as safe as STI ETF gives around 4% annualized return. Or if you want even safer, corporate bonds like UOB and Temasek bonds are easily giving around 2 to 4% dividends. Other than that, if you own cryptos, you don't even need to sell to profit from it. You can lend it out or stake it to earn some interest that's much better than any bank interest that you can find. Like Bitcoin and Ethereum, you can use Hodlnaut to earn 7.2% interest. For Cardano, you can earn 5% interest using your wallet. I even discovered that you could earn like 30% interest on stablecoins with KuCoin, which is like wow. All in all, this is how the rich become richer. Is it fair? Not really, but that's not within our control. One key takeaway is that if you want to be as rich as them, you will need to learn how to use the buy, borrow and die strategy. Anyway, that's all for today. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.